Good morning, welcome to the Phoenix Blue update on Wednesday the 11th of January, presented this morning by Tom Colley. Yesterday a very choppy day in the markets, not a lot of opportunities. I hope you did as we used, which was sit on the fence, or even if you were trading, trading at reduced risk. Potential for this type of scenario to continue over the next few weeks. We're waiting for the inauguration of Donald Trump as President of the US on the 20th of January. Not that that will immediately change anything. We will undoubtedly now need to see action and the promises that have been made, or the indications that those start taking effect, for the markets to react. As I think we've already mentioned, we are really looking for a bullish dollar, really, certainly for the first 6 months of this year, if not longer. But at this moment in time, we're really waiting for that to kick off, and hopefully from a trading perspective, that will happen sooner rather than later. News for the day, we've got manufacturing production for the pound. We had some poor figures in December. We should really expect some relatively good figures now. The UK benefiting from really competitive exports because of the level of the pound at the moment, and still having access to all the European markets. 2:15, Bank of England Governor Carney is in front of the Treasury Select Committee in Parliament. Is expected to be grilled once again on the reaction of the Bank of England to Brexit and how potentially negative it was about the UK economy, talking about recession, etc., etc. Personally, when I've listened to this, it tends to be a bit political, but there is also talk of some of the independence of the Bank of England being reduced on the back of this, but obviously that's all hearsay. 3:30, we've got crude oil inventories. We'll be watching this. We know there's an OPEC agreement in place at the moment that started to take effect in terms of what's been announced on figures the first week of the year in terms of output figures. We'll be looking at the crude chart in a moment, but something that we can watch here, as we're actually expecting an increase in inventories in the US this afternoon. However, unless that figure is substantially exceeded, seeing as that's the expectation, that could still be considered to be the OPEC agreement playing out as expected. 4 o'clock, we have President-elect Trump speaking. He's announced through his Twitter account that this will be a general press conference, whatever that means. He hasn't given a press conference of any type since July. With Trump, everything is unknown. His relationship with the press and how he's going to communicate going forward is also unknown. So rather than being an event that we can say we will glean anything out of, it's an event that we're cautious in case there is something to glean out of it. It may also give us some indication on how communication will go forward. So be aware of that, 4 o'clock this afternoon. UK time, obviously. Okay, over to the charts. The dollar index. Well, yesterday we came down below this level at 101.80. We can see we ended up with a nice bullish close, a low test type bar, with a close above that 101.80. That's still in the short term, although we've got weak markets, does maintain in our eyes dollar strength. If that was to break, we've got the level around, key level really, around $100 on the dollar index. That as long as the dollar stays above that, we will still be bullish dollar. But as I've said, we're really looking for the markets to give us some movement in order to take advantage of that. Over on the pound, yesterday the pound revisited its lows, potentially ahead of Mark Carney in front of the Treasury Select Committee. Overnight we had a recovery, or through the day, and then overnight we had a recovery in the intermittent strength of the dollar. But certainly some really key level down here. This level I see is much more key than this level down here, which was a brief level immediately post-Brexit. Or was that the flash crash? Can't remember. But seeing as it's just one tip down, we've no history at this level. This level's key from that point of view. We'll be looking to take any opportunities on a break below that. bearing in mind that the pound is a currency pair that tends not to pull back, so it may require us to take a breakout type trade if and when that happens. One trade we did take yesterday, or it was overnight, the day before, was a trade short on the Kiwi, and we can see we've got a trend line through here. That trend line's been retested once already. Price came up into this level here, perfectly into our order within a matter of 2 or 3 pips. Price came away, came down to our first target down here. We took money off the table, moved our stops to break even where they are now. We're sitting on a risk-free trade. We have a current T2 target right down here. That is in anticipation of potential dollar strength playing out on a long-term basis. Whether we see that or not, I don't know, or whether we feel that we need to come out of the trade if we get to one of these levels here before that without really significant dollar strength. We'll deal with it at the appropriate time. The main thing here is we've made a little bit of money, we've got a stops at break even, we've got no risk on the table. So we will look to hold that trade and hope that that takes us down to the downside and makes some more pips for us. Now, another trade that we have an order in place for is the Canadian dollar. We are looking to trade a level through here in confluence with this trend line here. You can see price has been hanging around above that. We do have crude oil inventories out today. And if that proves to be positive for crude and also positive for CAD, we have the potential for that order to be opened, and we'll be looking again for the dollar to play through and take us that through to the long side. As again, at the moment, we've got quite an optimistic T2 target. Whilst we're looking at potential dollar strength, we will be holding those sort of targets or setting out with those sort of targets, but obviously we'll be monitoring in the intervening period, particularly if we see correction in the dollar. I mentioned crude here. Crude actually, interestingly, yesterday closed below this level here, which is $55. We were ranging between $55 and $60. I saw those as critical levels. Would be looking, if we get the crude oil inventories that come out today and weaken the price of crude, we'll be looking for a further close below before a potential retest of 55 to take it down to the next level, about 49.50, I think that is. Before again looking to the long side, because that again is our longer term view due to the OPEC agreement and current inventory levels that have recently seen reductions. Now, another market we're looking at, and I know Mark talked about earlier in the week, probably yesterday, talked about one of the commodities markets we're looking at, which is cocoa. The reason we're looking at cocoa is we have a commitment of trader signal. We also have a seasonality. Coffee is the same. Now, you may see these blue boxes on my charts. I just use these to mark where we've had previous commitment of traders alerts and where we have a current active alert. Previous ones will always be solid on my charts. Current ones, whilst they're still active, will be dashed as that one there. Now, as you can see, these tend to mark, and the intention is they will mark highs and lows. We get those signals. That's analysis we do from the core data that comes from the CFTC in the States, which is the body which oversees the futures market over there. So these signals come from the futures markets, not from the direct spot FX markets. That's what makes them so strong, because to a certain extent they're coming from an independent marketplace. Now, we don't simply just take trades against these alerts. There has to be a clear technical setup that matches at those levels. One example where we didn't get that clear setup and why we haven't already been long coffee is because through the period of Christmas, coffee broke below this key level here, which meant technically we couldn't take the trade at that point. we now have a breakout above this next key level there, and we'll be looking for a pullback this week into that level to take the trade to the long side. Coffee is seasonally long till about from the beginning of the year through to about mid-March. So what we've got is a combination of commitments of traders analysis telling us that the commercial traders in the futures market are at an extreme level, which would normally constitute a bottom. That's matched with a technical level, and then over the top of that we have the additional support of it being a seasonal move. And seasonal moves on soft commodities are often stronger and longer than they are in the FX market for the nature of the goods that you're effectively looking to trade. These are agricultural goods predominantly, and therefore they have natural seasons anyway in terms of production and supply. Now, if you want to know more about how we analyse these commitments of traders' signals and how we utilise them, not just on commodities, but as I said, you'll see these all over our FX charts. You'll always see them marking highs and lows, and they are a really, really strong tool to use alongside our fundamental analysis and our technical analysis in order to get into trades and to stop us taking trades at bottoms or into potential tops. If you want to know more about that, contact us either directly at info@PhoenixBlue or through the website phoenixblue.co.uk. Keep an eye on these videos. We will shortly be announcing a couple of new things that we're going to be launching this year. They will allow you to get an insight into how we trade potentially remotely as a prelude to coming on board and learning in more detail how we actually take trades on a day-to-day basis, how we analyse the charts, and how you can learn to do that so that you can trade successfully independently and make trading your living. Okay, guys, that's it for today. I said market's a bit quiet at the moment. Keep an eye on Instagram, Twitter, etc. If anything moves that's worth talking to you about, we will be communicating with you on there. Thank you very much for listening, and we'll speak to you again in the morning.